Hello, everyone. Very good morning to one and all present over here. So thank you for joining us on this webinar on risk management and position sizing. We have Mr. Suraj Patija with us, who is the co-founder and CSO of AlgoBulls, and he has been a trader since a decade and has been trading on multiple strategies which are related to index option sizing and option writing strategies and etc. So today's webinar is going to be more towards the risk management side when we talk about the strategy and how does an algorithmic trading and how algo trading helps you to manage your risk in a more effective and efficient way. So Ms. Suraj will be actually presenting you few of the strategies and actually showing you how the strategies are risk managed. And post that, I would be showing you how are the strategies available and how can you use all the strategies on your brokerage account and actually take trades and just perform like an expert trader. So I would like to welcome Mr. Suraj to present and actually start the webinar.
Hi, Yes. Am I audible?
Yes.
Okay, thank you for the great introduction. Thank you people to join in, and we respect your time. In the live marketers, we really appreciate you all have take out your valuable time and join in the webinar. So today we are going to talk about risk management and position sizing. So what is basically risk management and how it will be useful for retail traders to manage the risk and chase alpha? Basically, risk management is a process to identify and mitigate the uncertainty in the investment or the trading decisions. Risk management is you cannot separate risk from returns. So, for example, if you all think that risk is we cannot take risk and we can do the trading, it's not possible. So, first of all, that's a thumb rule you need to cope up with. There is always a risk involved in trading and investments. So risk can be classified in two parts. It can be systematic risk and unsystematic risk. So of course, systematic risk can be mitigated or avoided, but the unsystematic risk cannot be mitigated or avoided any time or by any approach. I just want to understand if everyone is comfortable with English or Hindi, what language is preferred by the audience. Please just comment in the chat box. So we'll go forward with the same. Great. So majorly I'm getting it in English. So yeah, we'll proceed in English. Great. Thank you so much. So basically risk is involved in each type of trading journey or in each investment process or every part where you take trades in the market. So there are two types of risk as I was telling. One is systematic risk and other one is unsystematic risk. Systematic risk can be avoided by taking care with the proper risk management features, which we'll be explaining it to you what we follow during our live trading. And unsystematic risk is something we have to reduce, but it cannot be taken care of unless there are proper stringent risk management features. So what's beta? Beta is also known as the market risk, is measured of the volatility or the systematic risk of the individual stock or compared to the entire market. So every stock or the instrument has its own beta, market has its own beta. So beta is the measure of the market risk or the volatility which is actually happening in the market. So why risk management was important is because not to blow up your entire capital. For a newbie trader, he thinks that if we have a positive signal and if we have a positive trade being placed, so we can take the trade. It's not like that. You need an important risk management system in place to not blow up your capital. So for example, if you are taking a capital of 1 lakh, which is small for the retail audience, and you are going for option buying anywhere like 20 to 30,000 bucks, you are buying one of the bank nifty option, you could easily blow up 30 to 50,000 bucks. So that's 50% of the capital in a single day, in a single hour, or even in a single minute in today's time. So why risk management is important? It is because everyone in the market works with a hit ratio of the strategy, and no one knows if that trade is going to be a profitable one or the loss making one. So it's very important to manage the risk and blow up only that amount of your capital, which is actually not blowing up your entire capital and not making you out of the game. So you must have certainly heard from everyone in the market saying that you should have a strict stop loss, you should follow your risk management. But what is that? Is that simple? So do you think it's very simple to buy a security or buy an option at 200 bucks and just let it go at 180 or 150 bucks, maybe something like that? So it's not emotionally possible, or it's not humanly possible, because every time you sell those kind of options, you exit those kind of options, you always feel that this will go up gradually, this will go up gradually. It's an emotional decision which hinders into the actual trading ecosystem. So that's where we are bringing algo trading, where it's non-emotional thing and your emotions don't hinder with the process of buying or selling of any securities, whatever you are trading into. It's the computer who is making an emotionless decision. So that was about the risk management. I'll go into that in detail in the third slide. So second and most important thing is position sizing. So this is also related to risk management. So basically, what is position sizing? So position sizing refers to the number of units an investor or the trader invest in a particular security. So basically, what is the quantity you are trading into? So for example, if you are buying option, you will be trading into 1, 2, 3, 4, 5 lots, whatever it is. If you are selling option, you'll be selling it like 1, 2, 3 lots, but that's based on the margin requirement by the broker. For buying options, it's directly LTP into the lot size, but for the selling, you require appropriate margin. So what is the position you are maintaining for getting the success of the strategies? These topics seem quite boring, but these are very important if you want to be a profitable trader, because I will tell you one thing: whatever is the hit ratio of your strategy, it's going to break that in future. Keep that in mind, and it's going to make your results worst in the live market, and you will always feel, I am pretty sure everyone who's present over here has observed such situations wherein back testing only 7 out of 10 trades were right, but in real trading all the 10 trades go wrong. That's because it's an average of the past 1, 2, or 5 years backtesting what you are taking. And there is a difference between the average of the reports and the actual reports which happen in the live market. So basically, position sizing is very important. So for example, you are running a strategy with a hit ratio of 70%, maybe you consider it worst. Like all the 10 trades are going to be in negative, and just go for 20 trades if you like. Trust me, you feel this is not doable, but this will happen in the real market. And most of the retail traders are kicked out of the trading systems because they are not able to manage their risk or the position sizing. Sir, your strategy is not into fault. Your systems are not into fault. Your markets are not into the fault. The fault, what is there, is in the position sizing. Because of greed, because of fear, we increase the position sizing or reduce it during the time of uh, when the market is not in our favor. But suddenly, when we reduce the position sizing, the market turns into our favor. So it's very important to maintain a position sizing considering the worst case of the strategy. So determining appropriate position sizing requires an investor to consider the risk tolerance and the size of the account. So for example, my size of the account is 10 lakh rupees. I cannot burn 5 lakhs in a single day. That's 50% of my capital. I even cannot burn 10% of my capital in a single day. For a day, you can only burn max 1 to 2% of your capital. So that should be your, that's for me, everyone's can be different. So you can only burn around 1 to 2% of your capital, and whatever your capital size is, don't go into the greed and just maintain your position sizing. Trust me, these topics are some topics which are never taught in the market, and everyone feels and takes it for granted. But there is a day where you are buying options, there are continuous 10 stop losses or even 15 stop losses, you are out of the market. Some people don't even stay up to the 15 stop losses. Trust me, option buying is a game wherein all the retail traders are interested, wherein the alpha is very high, like into 100 times, 1,000 times. But all the retail traders get out of the game when there are continuous stop losses being hit. The hit ratio for option buying strategy will always be less until and unless you are taking very less trades and you have some holy grail formula. So it said that even with the correct position sizing, investors may lose more than their specified risk. So the point being here is sorry for this. So with the correct position sizing also, there are chances the investors are losing more than specified risk. And that is the time where people are feeling to believe that this is not for me and I won't be able to do it in the live market. So that's where the position sizing comes into the point, and it's a very impactful thing where you manage the risk and manage your positions. So these 2 points are highlighted very strongly in the presentation. We request you to keep the position sizing and risk as per your tolerance level. For me, it is not more than 1 to 2% per day of your capital, whatever size your capital may be. You have to be in the market for 20 to 25 stop losses. So why algorithmic trading? So as such, we believe that, as I already told you, that it's not about AlgoBulls, it's about overall market or overall human behavior. So why algorithmic trading? We are always suggesting it is not, see, one very important thing which everyone knows around here is speed. So by telling speed, the execution is always in the live market speedier way with the computers as compared to humans. So there are already computers running against you. So when the machines run against the human, always everyone knows, the layman will also know that the speed of the machine or the computer will be much higher. So the opportunity which the machine or the system will get is huger than compared to the human trading. So that's the speed part. The second part would be the execution part. The accuracy of the execution for the machine or the computers or the algos will be very high compared to the human execution in the specific price what they want. Third is emotionless trading. Emotions are very hindering to humans, even to any great individual who is a very profitable trader, even though there are emotions which are binded to themselves, and it will always hinder the the trading journey. Fourth will be managing the risk. So every time a human won't be able to sit into the trading journey, sometimes it would have some personal problems, some personal commitments. So you have your own profession to do. You are coming out and removing some valuable time over here to watch the webinar. Who is doing the trading for you? There should be computers doing this, right? So hence we have requirement for algorithmic trading. So basically, what does algorithmic trading does is mentioned over here. It manages risk, maintains returns, maintains the position sizing, chases alpha, and it helps you relax and automate the strategies. So I'm not promoting anything over here saying that only this engine or only this platform is good, but you can explore it and you can check out by yourself about how algorithmic trading is actually better than human trading and why it should be adopted by the retail audience. So previously only HNIs and institutions had that opportunity to use algo trading for their investment or the trading journey, but currently our markets are open for retail audience to adopt the technology and move forward with it and chance of gaining higher alpha. So how do you manage the risk? So first and very most important of risk management and position sizing, I have already covered in the presentation, but I'll now take you further how to do it practically in a real life world. So supposedly you are using our platform and you want to manage risk. There is a feature called P&L tracker. For every algo which you are running, you can run the P&L tracker along with it, and you can define your risk and return for that certain amount. Say for example, you are running a option buying strategy and you have a capital of around 1 lakh. You are running it on a one lot thing, and you want to define your risk to a max loss capacity of, you say, approximately around 5,000 bucks or even 2,000 bucks for that option. So you can just using that strategy cap that risk to 2,000 bucks, and the returns can be exponential 1:2, like 4,000 or 8,000, even more than that. So that's how you can manage the risk for each and every single strategy on the platform. So there is a feature called P&L tracker, which helps you to manage the risk for based on each and every single algo which is running in the platform. The second part would be maintaining return. So maintaining return, how do you maintain return? So there is no holy grail formula in the market, or I can tell you, I don't know any holy grail formula in the market to get consistent profits. One thing that can be consistent is your trading journey. How that can be consistent? By when you all manage the risk and returns or the position sizing of your account. So for managing the returns, you have to be in the game, and you actually have to do the type of trading which suits your trading style or your risk tolerance levels. So for example, say my risk appetite is not very high. I have a margin of around 2 to 3 lakh bucks, and my risk appetite is not very high. I will not go into the option selling part. So once if there is a black swan event, I can blow up my entire capital if I am not using a stop loss or if I am not managing the risk. So by for maintaining the return, you have to maintain your capital. For maintaining the capital, you have to follow the risk management, and for following my risk management, you have to follow position sizing. So that's where the third point comes in. Once your risk, return, and positions are managed, any strategy with a hit ratio of more than 60% will work for you. Any strategy, any single strategy. So here we are not promoting any technical indicator which says that using this technical indicator there's a magic. Using that, everything is based on maths. Everything fails for some time. Everything passes for some time. So there is no magic behind, or it's pure mathematical calculation for each and every indicator. The magic lies in managing the risk, maintaining return, and managing your position sizes. And that's the time when you can chase the alpha, and that's the time when you can actually run the systems in your favor and be a profitable trader. Sorry. So basically, the secret of big guys lies between the risk management and position sizing, and not with any such technical indicator. If someone is promoting any technical indicator in the market which says that using this indicator you get 100% sure short signals, please take my capital and add it on the strategy. I feel there is something new for me also to learn in the market. There is no magic in any indicator. It's a pure numerical statistical form where you can actually deploy your capital on the signals which are generated. The magic lies in the risk and the return management. So how we do this basically? So we'll give you the demo of the platform, how we do it. But first you need to understand what is running behind the scenes. Like, it's very important for you to understand what is there in the back end. So at AlgoBulls, we have created a cloud-based infrastructure which is connected with each and every major player in the markets or the ecosystem. So we are connected with the clients, of course, the retail traders, the professional strategists who have their strategies and who are willing to democratize those strategies to the retail participants. We are connected to the data vendors who are giving you the live feed. We are connected, of course, with the market and the OMS platforms which help us to place the orders directly in the exchanges. We are connected with the brokers who are intermediaries and allow us via the API to place the order. So basically, we are centered with all the participants in the market appropriately, helping the retail participant to actually use the infrastructure what we have created, and without even writing a piece of code, do algo trading, which was previously a dream for people without even writing a piece of code. So we have actually dedicated a virtual server for each and every little strategy execution to avoid any hardware resource sharing and which can cause delay. So we don't expect any user to come up with an upgraded hardware or a technology wherein they can the desktop application will be actually installed in their computer. So there is nothing like that. It's a one shot, like you access to a cloud-based website. Like what you do for ant.aliceblue.com, you just access to the website called aliceblue.algobulls.com, and therein you can use the strategies which are listed in the market, or you can get in touch with us to make the strategies and develop the strategies for you without even writing one piece of code. The technology what we use are in-house technology, and that helps us to reduce the delays, reduce the time gaps, improve the data quality, improve the order execution systems, and many things. So that's a completely proprietary in-house developed technology, and that is from our own tech team, and we have no third party dependency on any broker or trading view or anything like that. Each and every complex strategy can be made in-house, and that can be deployed on the platform. So the technology running behind the scenes is much more user huge, which is compared to the uh, technology what you'll see on the front end. So there is servers, or there is virtually computation engines or historical databases running behind the scenes. So the strategy execution also plays a very important role. So I know the audience are pretty smart, and they are aware about what algo trading marketplaces are aware and in the market and available in the market, and everyone is much aware about it. So what is the difference? So the difference lies between the strategy execution. So as mentioned, we just don't place orders, we manage the entire order life cycle from entry to exit end to end. So the point over here is the orders which we place are not, it's tracked with a unique order ID, and those order IDs are mapped with the broker order ID and the exchange order ID, and those are continuously monitored by the systems. So in case of reversals, in case of manual fidgeting of the order, in case of API failures or any other hindrances, the systems are intelligent to take care of the order. In the reversals, it will take multiple entry exits. So quantity, risk, position sizing, PNL tracking, order management, each and every single thing is managed by the smart strategy execution. And that is not expected by user to, do it manually and keep track of all the things in the live market. Any type of complex execution is managed end to end from entry to exit in the live market hours by the systems in itself. So we hold the ability to build any complex strategy because we are not providing any drag and drop tools and to the users, and we can deploy or execute any kind of complexities. If you all have any such kind of strategies, feel free to contact us and get it done from us. Any order type, stop loss limit, anything with the limit, market, order tracking, 50%, 75% of the stop loss. If you want to trail the stop loss, you can do it the same. And that strategy will be exclusively available in your portfolio, and you can deploy that in your clients or your own accounts. So this would be the last part for the risk management, wherein we already discussed a lot about the risk management systems. So this was the P&L tracker, which I was showing you in the start. So for example, this is one of the strategy. This is the live screenshot of the systems running. So herein you can give the profit and loss target for each and every single strategy. So for example, you are running one strategy on Nifty, one on Bank Nifty, third on Tata Motors. You can provide each and every strategy with a dedicated stop loss and target. So here for the Nifty options, we have given a loss target of 5,000 and the profit target of 10,000. We just have to click the save button and start the. Once you start the system, whenever those values are breaching, our systems will try to square off the trades, cancel the previous pending orders, and manage your risk. Say for example, you have a capital of 5 lakhs and you are giving a risk of around 5,000 bucks for a day, and you are even making a loss for 10 days. You are just losing like 10% of your capital. But say you are not using this feature and there is any bad movement in the market, which is huge impactful movement, and you just blow up like 20 to 30,000 bucks in the market, would you be able to emotionally trade in from next day? That's not possible, because that's your hard-earned money, and you require these kind of features in the live market to manage your risk and to work for you. So in the background, we also have dedicated risk management teams. So that these are all technological products, and those are certainly bound to failures. NAC systems are down, anything, data vendors are down, anything like that, which we have around 99.98% accuracy. But in the uptime of the technology servers, so that's actually claimed by our server providers. So if that period of time there are any other live market challenges, we have a dedicated risk management team which is working behind the scenes to just see and inform the customers what issues are being handled in the lifetime and to provide any dedicated support. So we have a very powerful feature plus very powerful team which will actually help you to manage the risk and cope up with your returns. So anytime in your trading journey, you all have felt the same that we are not profitable or we are not able to create some alpha because of some signal or strategy or some formula that's not right. If you are not able to create the alpha, it's because of the risk management and the position sizing. Any strategy, I repeat, any strategy which has a hit ratio of more than 60% or above, it will be a profitable strategy for you if the risk management system and if the position sizing is correct. I'll repeat one more golden rule. If you all have got a hit ratio of 60 to 65% in the historical database, which everyone in the world, all the PMSs compare, that is bound to break in the future. It is not that the strategy has got 60% hit ratio. So whenever you start trading, from the day there are 10 trades, you will get only 6 negative trades. You can get more. So the point being over here is historical returns are never the guarantee of future returns. You have to manage the risk and returns, stay in the market for the day to capture the profits, to capture the movement of the index of the instrument, whatever you are trading till the date it takes the momentum. So for that, for the efficient risk management and the systematic position sizing will create a huge impact in the market with the retail traders. And all those features are actually available, which will be shown to you in the demo in the next section taken by Yash. And I think that will be a major impactful resource for each and every retail trader around here who is willing to be profitable one day and who is willing to take the risk management and position sizing features seriously. All these features are not taken very seriously in the markets because majorly people see the hit ratios, majorly people see the backtesting results and take the decisions. But it's very important for each and every one of us. Consider this more than 60% importance in a decision making process wherein the risk and return is to be managed by the individual. So that's from my part. Yash will be demonstrating the platform and how to manage the risk and return and all the strategies basically he has in his plate. So that's all from my part. I'll be there for the Q&A session. Thank you. Thank you. Please just shoot the question or answers if you all have any in the chat or Q&A box. We'll be addressing it after the demo.
Thank you, Suraj. So I would like to start by so I would like to actually present my screen and actually showcase you the product. So before that, I would like to start by saying that profitability comes with consistency more than more than the discipline and more like even the psychology matters in that. So to manage the kind of profitability you would need to actually trade emotionlessly. And when you trade without any emotions, so you would need the involvement of computer so that it can take entry, take exit at the time of your target, at the time of the stop loss. And for that, we people here at AlgoBulls have developed end-to-end fully automated algorithmic trading platform, which is currently live with 5 of the stock exchanges, which includes National Stock Exchange, Bombay Stock Exchange, MCX, which is for the commodity markets. And currently we are in the beta mode of NASDAQ and NYSE, and soon we'll be live with them too. Apart from that, prior, as Suraj was saying that previously back in, you can just say even back in 2018, thinking even about algorithmic trading was a big challenge for us because we people didn't have the kind of technological support when we people would want to actually code the strategy, get the kind of brokers integration, connect to the exchanges. Can't find automation because we would be continuously on charts as well as continuously trading on a strategy. Plus there was no customer user experience when we guys actually developed it from the drag and drop system and actually didn't know what really happened in the trade. So for all those things, we here at AlgoBulls have created an end-to-end automated solution connecting to 27 plus brokers, connected with 5 plus exchanges, created a marketplace of 150 plus strategies which are live on our marketplace, classified in retail, premium and HNI segment, which creates a stress-free trading solution for you or stress-free trading experience for you. wherein you just need to click on start, and actually your strategy is going to take trades accordingly with respect to your risk ratio and with respect to your profitability. It is going to execute the trade and it is going to square up the trade accordingly. Apart from that, we have, as I was saying you, we people have a marketplace of 150 plus strategies. So I'll just show you how you can access this marketplace and how you can actually go out and actually explore the strategies. So you can just go out on the link called aliceblue.algobulls.com. I'll be dropping the link in the chat section where you can directly go in and actually log in. Over here, you would have two options. One is sign in with Alice Blue, directly enter your client ID and password, and you can sign in over here. Otherwise, if you're an existing AlgoBulls user, you can type in your username, you can type in your password, or you can sign up if you're a new user. So since I have an ID, I'll be directly logging in. And then this is the kind of dashboard which is going to display in front of you, which is going to show you end-to-end information about your account. It's going to show you what's the AlgoBulls money remaining in your account, which are the strategies added, are the real trade started, backtesting strategy started, and AlgoBulls funds. And it gives you a status of your AlgoBulls funds too. Apart from this, it is going to show you what is the trading volume, or what is the trading volume running with your strategy, what was the PNL of the strategy, and what was the usage of AlgoBulls money from day-to-day basis. So when you talk about trading volume, right, you can even classify this trading volume from today to this week to this month and this year. So as Suraj was talking about risk management and returns. So if an amount was invested, you could see like what has the trade been taken, like on the basis of trading volume in the day. You could see like what has been the what has been the PNL being generated for the daily basis. Like you could see this is a this is a monthly report wherein you can see few of the small losses, but one big profit has covered almost all the small losses, and that is what comes in when you're managing your risk rightly. And by the time we guys are already talking, you can see the PNL being updated directly for the strategy. So one by one, I'm going to show you all these features. I'm going to show you like how you can actually execute the trades and how you can actually trade in the live markets. So I would like to firstly take you through our marketplace, and our marketplace has been divided into three categories: retail, premium, and HNI segment. So retail segment, you could find strategies related to intraday strategies and the swing trading strategies, which are mostly towards the intraday side or mostly towards the future side, which are comparatively low in risk, as well as comparatively has lower returns, and lower returns in the sense equivalent returns compared to the risk. Apart from that, we people have a premium marketplace wherein you could see option buying strategies and option selling strategies, which are higher in the nature of risk, as well as give you higher returns, and considerably has a higher drawdown too for the strategies. Apart from this, we people have an HNI marketplace, which are mostly related to index future buying and index future selling strategies, which mostly require higher amount of margin, which needs to take the trade, and also you could expect the higher amount of return for the strategies. So I would be showing you a few of the strategies. I'll be showing you a strategy card and actually explaining you how the risk is managed for the strategy and how everything is being performed in the strategy. So I'll be taking you through the smart trade writer strategy, which is being developed by AlgoBulls itself. And the moment you actually expand the strategy, right, you're going to find end-to-end information about the strategy. You're going to find what was the ROI generated by the strategy over the period of 1 or 2 years of our backtesting. What was the maximum drawdown the strategy has faced over the period of 1 or 2 years? When was the last when was the last sell call generated for the strategy, and when was the last buy call generated? So since this is writing strategy, you could see this there is a sell order placed, and what is the running PNL of the strategy on yesterday. Apart from that, you could see what is the margin required to enter in the strategy, what is the risk appetite you could expect is 2000 rupees, 2000 rupees of loss in a day, and desired profit could be 7000 rupees profit in a day. The duration for the strategy which is recommended is around 180 days, and the transaction charges won't be cut because you would be purchasing AlgoBulls plan. Apart from that, you would find few of the information like strategies written by whom, the strategy's name, the exchange, the instrument on which strategy is been performing, what's the candle interval on the basis of which the strategy is been performing, trading type of the strategy, trading time start and trading time stop, and what are the parameters on the basis of which the strategy is based on. So you would find all this information over the parameter section, and on the detail section, you're going to find in detail explanation about the strategy, which is going to actually help, which is going to actually the thesis behind the strategy or the theory behind the strategy, the calculation behind the strategy would be explained in simple words over here. Apart from that, as we people invest anywhere in the market, irrespective to mutual funds, FDs or corporate deposits, we people would never forget to see the fact sheet of the fund. So in the same way, when we guys are investing in algorithmic trading, we people call this the backtesting report, which gives you end-to-end insight about your strategy or end-to-end insight like how the strategy has been performing. So you could see the end-to-end insight in the backtesting side. We have 4 sections: summary, returns, trade book, and insight. So on the summary section, you could see the ROI in INR has been approximately 3,21,745 rupees over the period of 1.5 years. And the ROI in percentage has been of 207.58%, and the maximum drawdown the strategy has faced was minus 3.8%. And the number of trades taken in this 1.5 year was 686 trades, number of win trades for 377, and the number of lost trades for 309. And as Suraj was saying, you can enter into any strategy with a hit ratio of 50 plus. The same way the strategy comes in with a hit ratio of 54, wherein your positions are completely risk managed and it's risk diversified. And the average trades the strategy takes per day is 3, and the number of short trades and the number of short trades are number of short trades are long, and number of long trades are less. The average gain you can look out for is 7,000 rupees, and the maximum loss you have that this strategy has incurred is of 4,268 rupees. Average profit per day is 1,752, and the average loss is of around 1,000 rupees, which is how the markets are running sideways. Apart from this, from the return side, you could see the strategy has generated 207% return. From the past 30 days, it has been giving you 1% return, wherein we consider current market situation where it is not a good time for option writing and etc., as well as the markets have been moving sideways. In the past 2 weeks, it has been negative of 0.31 and 0.11 respectively. Apart from that, you must be wondering that how all these things are calculated and where are the trades where I can look out for it. So this is the trade book, which shows you end to end, like how the trades have been taken on daily basis. So like you could see the last trade was taken on 16th 11th, which was the last trade was taken on 16th 11th, which was yesterday, and you could see the sell price was at 212, and it bought at 267 where the market rose. So it was sitting at a net loss of minus 135, and in the same day it has taken one more entry at 276, and it sold at 226, which was around 1,250 rupees profit on one lot. And you could see and you could actually find all these details over the trade book section. Now, to maintain the transparency, you can go out from trade book 1, 2, 3 till 69 till the date when the strategy has actually started. So it has started on 1/7/2020, which was last year, and till today's date, you could find end-to-end information over the trade book section. Apart from that, to actually simplify all this trade book, whether you go and calculate all those trade books and actually put it in an Excel and actually derive the value from it, we people have that simplified in an insight format, wherein in the insight section you could find what was the average profit per day, what was the average loss it did per day, and you could find end-to-end information over this PNL section, which gives you end-to-end over this PNL section in INR, which shows you what was the average profit booking ratio on daily basis and average loss booking ratio on daily basis. It's going to show you what is the PNL of the strategy and how the strategy has been performing. It has been showing you the ROI the strategy has started with. It has started with around ROI in terms of amount. It started with 3,000 rupees profit currently, and then it initially started at around 135, 137, 182, 266, and 318, 3 lakh 3 lakh 24,000 rupees, which is the current ROI this strategy has been generating. And this number keeps getting updated on a daily basis. After the market hours, you can come in and check, and you will find all the trades and all the ROI in percentage in INR updated. Apart from that, you could see the equity curve, which shows you if you would have started an investment at 1,60,000 rupees today, down the line 1.5 years, this investment would have turned around 4,79,000 rupees, wherein the 3 lakhs are the profit and 1,50,000 is your capital amount. So you could see how this strategy has been consistently generating you the returns over the period of 1 year with a high with the properly risk managed factor and etc. And the maximum drawdown the strategy has had was around minus 3.55%, which was during the start of the strategy, and post that the strategy has been performing very consistent. So you could find all these details over the backtesting report and backtesting section. Apart from this, now you're confident about the strategy and now you would want to actually take trade on this. So you can just click on execute button and the strategy would be added to your portfolio. And once the strategy is added to your portfolio, you can directly start and stop the strategy as per your requirement. Apart from that, to know how the strategy is doing, we people actually provide you this section called logs, from where you can see how the broker has been connected, and on what basis the strategy has been placing the order or it has not been placing the order. What are the parameters the strategy has been going and performing, and on what basis the trades have been taken. So this logs give you end-to-end report on how your strategy has been performing on day-to-day basis. Apart from that, since now it's the live market, so like all the strategies are live. But in case if you want to backtest few strategies and you want to see okay how the strategy is going to work around for me, so suppose if I add the strategy alpha option buy to my backtesting report, and I just want to now see how the strategy has been doing for me. So I can just go out, download, and I could just go out, make some changes over here. Like if I want to backtest this from, if I want to backtest this from November 2020 to November 2021 today's date, and I click on it. Suppose I'm adding today's date and today's time, and I just want to save this thing, and I just want to see how the backtesting has been performing. So you could see that strategy tweaked and the backtesting would be performed, and you could actually find the reports over here for the strategy, like what was the log of the strategy, what was the summary of the strategy, and etc. And at the same time, on the paper trading side, if you would want to take paper trade on the strategy with the same parameters, you could also do the same thing too by managing the strategy and adding it to the paper trading too. So there's a section called managing the strategy, wherein you can add it to backtesting, add it to paper trading, and add it to your portfolio. So accordingly, you can actually add it to paper trading and add it to backtesting. Now I'll tell you. Now Suraj was actually showing you that how you can actually track your own profits and how you can actually track all the trades. So suppose I go out on my dashboard and I see, okay, this is the trading volume which I'm currently trading for this month. So you could see this was the profit generated. So you could see this was the P&L generated for the day. This is the P&L running for today's strategy, which is at plus 2000, minus 2000 OMC, and these are different strategies which have been running in the account. So to keep a track of all the strategies, right, you can go out on P&L book, which is going to show you when was the order placed from AlgoBulls ID and what was the confirmation of the order. So you could see a strategy on SBI and sell for one quantity, and this is the current P&L running. You could see that Nifty Bank. You could see this. This was the entry quantity. This was the entry price. This was the entry. This was the entry quantity in terms of lot, not in terms of lot. This is in terms of quantity. And you could see the exit price and what was the net loss booked or net profit booked. So you could see that this again Nifty bought at this price and at this quantity booked a profit of 10,000 rupees. So you could find all these things which are like very much simple to you in terms of viewing it, and you can view this at your broker terminal too. You can also find the trade book and actually see like how the strategies have been trading. You could see the quantities, you could see the price, you could see the funds book, which is going to show you what was your fund balance in the broker's account at the, you could see the fund balance at the broker account at the end of the day after you have utilized the margin given by the broker. And this fund balance is more towards the AlgoBulls money usage and the backtesting charges usage and etc. Apart from that, to keep a track of end to end of your portfolio, you can just go out on the dashboard and simply select when you want to see the returns, for how long you want to see the returns, and etc. And you will be actually able to see the P&L, AlgoBulls money usage, the trading volume, not only for today but for this week, for this month, this year, accordingly what you choose. Apart from that, I think so. I'll just show you how you can actually start everything. So you can just go out on plans, and so firstly, I'll just show you, in case you haven't connected your broker, you can go out over here and connect the broker account of your choice, which is the Alice Blue broker. You can just sign in with the O authentication by typing in your username and password, and the broker would be authenticated. Apart from this, when we go out on pricing and plans, like we could we have various different plans with respect to what is your requirement. So in case if you're looking for retail strategies, it would cost you around 2,500 rupees plus GST. If you want to access premium strategies, it would cost you 4,500 rupees. And if you want to access HNI strategies, it would cost you 7,500 rupees. So talking about the pricing part, I think so it would be better. So I'll be dropping in mine and Mr. Chaitanya's contact on over the chat section, so that you can directly get in touch with us and actually get to know about the pricing, and we can have a discussion on how we can work around with the on how you can actually start trading with AlgoBulls. Apart from that, if you are a strategist and if you want to get your strategy developed from us, or you want to get your strategies live on our marketplace, you can directly get in touch with me. I'll be dropping in my contact details below too, and we'll be happy to have a conversation, and we could see if the strategy could go out on marketplace or we could deliver it to you. So thank you everyone, and now we would be open for the questions over the Q&A section and over the chat section. So yes, talking about your custom strategies on MT4, right? So if your strategies are on MT4 with regards to chart, Mr. Manuel, what we can do is we can actually code your strategy end to end and deliver it on your dashboard. So that is not going to be an issue. Otherwise, from MT4 we can have an API integration too. So I'm dropping in my details. Over the chat section. We can have a discussion on the strategy discussion part. Any other question, anyone? Yeah, Suraj. We are yes, so as of now we can't find, there aren't any questions. So yes, so I would like to. Okay, so yeah, there are various different platforms on algorithmic trading. AlgoBulls is not the only one which is into algorithmic trading. But when we talk about competitors, so talking about our pricing, right? In the other platform, you're paying for a single strategy and using it for a month. But on our platform, you're paying this pricing and you will get access to 150 plus strategies depending on retail, premium, and HNI, which marketplace you purchase. So rather than paying 500 into 5 or 500 into 10, which is going to come to around 5,000 rupees or 10,000 rupees in a monthly cost, wherein you can get all those things at a single price. And when we talk about our platform, so that's the reason we have kept our pricing consolidated with the number of strategies which you could use. And when you access the retail when you actually buy a premium plan, you get access to the retail strategies too. And when you actually purchase a HNI plan, you get access to retail plus premium plus HNI plan, all three. So that is how you get access to all the strategies in the same amount. You get exposure to multiple strategies. So yes, of course, the choice would be yours when you would want to do the platform comparison and etc. And we'll be happy to assist you. I will be happy to assist you and give you a brief demo, wherein you can connect with Mr. Chaitanya over the call or over his WhatsApp. I'm dropping in his details below. Any other question which we could find? Yes, Suraj, I can't find any questions.
Sure. Thank
There
you,
is a
audience.
question. There is a question, Suraj, on delta-based monthly option selling.
Delta mission strategy. Any plans in this? So we do have strategies based on delta on monthly option sellings. Those are listed in the HNI part of the marketplace. You can contact the given numbers in the chat box to use the same strategies. So we do have strangles, we do have straggles, anything what you require is available. So you can contact the team and we can show you the demo and you can execute those strategies.
Absolutely, Mr. Mukherjee. I've dropped in Mr. Chaitanya's contact. You can directly call him or drop him a WhatsApp text, and you can have a conversation with him to know more about the strategies and to know more about the plans. So yeah, I think we have addressed all the question with respect to this webinar, and I would like to thank everyone to join us on this webinar during the live market hours. It was really great to learn from Suraj. It was really great to learn from Suraj on risk management and position sizing. And I would like to thank all the audience too to join in and actually support us on this webinar and and were very interactive. You can stay tuned for more. You can stay tuned with our page aliceblue.algobulls.com for more such webinar series coming in line to actually stay updated on webinars and stay updated on offers. So thank you, Suraj. Thank you, everyone.